Okay, all right. Good morning. Please, let me just confirm again. Can you hear me? Are you hearing me?
Good morning, sir. Yes, we can hear you.
Okay, all right. Thank you. Good morning. All right. So I want to just welcome once again to our webinar series this for the month of December. Wow, the year is rounding. The year is rounding off. It's quite an eventful year with its own issues here and there. But I want to believe that as business people, we've been able to at least make do or just take advantage of some of the both the pleasant and unpleasant things that um, the world and particularly the climate that we live in has brought our pathway. And so once again, let me just welcome us. The webinar series is it's a partnership between the University of Ibadan and Zucchini Fashion Center under the auspices of the University of Ibadan Fashion Community. We're also working on building the community of fashion entrepreneurs for both students and non-students alike under the umbrella body of the University of Ibadan. And we've actually run this webinar series for, I think, 7 months. This is the 7th month, but under the name, the webinar name, Business of Fashion. This is the 6th episode, if I'm allowed to use that word. And we've actually zeroed in on finance over the last couple of months. And I want to believe that we have gained 1 or 2 things. Please, if you've missed out on any of the webinar, you can just visit our YouTube channel so that, because it's a build-up, it's one building on the other. And like I said earlier, this will be the last for this year. And hopefully in the new year in January, we will look at something around pricing just to set the stage for the year. And from there, but we'll see how it goes from there. And the kind of strategy we will be using going forward. But again, let me just welcome us. And I hope that we would have an interesting and engaging time this afternoon. So we're looking at the topic under the series the Business of Fashion series. We're looking at essential financial records for business sustenance. Essential, sorry, I want to just do a full screen now. Okay, great. So we're looking at essential financial records for business sustenance. So basically, we could just say that we're looking at essential financial records that we need to put in place as fashion designers, as fashion entrepreneurs, which would help our fashion business, our business as a whole, as we go forward. Don't forget that we've been looking at finances, area of financial literacy, basically. And I think it's crucial because whatever, I always say this and I'll repeat it again, whatever activities you're doing in business will always come down to money. So it's either it is bringing in money for you or it is taking money away from you. And that's why all your activities must come down to, it comes down actually to money. But what is now crucial is if you understand that it comes down to money or not. That's where the main issue really is. So because if as a business person, you understand the fact that everything you do in business, even NGOs too, you still find out that it still comes down to money. So just a quick recap. This was where we started from. This is about 7 months ago, positioning for the big boom in fashion from farm to the hotel. I always like to explain that this was this particular training was designed for engineers and technicians. But even as a fashion entrepreneur, you can glean a whole lot from this training as we looked at the fashion value chain from the farm all the way through to clothing, to the final outfits. So that you can also, you can go to our YouTube channel to watch that video, and you will, I'm sure that you will learn a whole lot, and you'll see gaps in the industry that you might be able to pitch in your business, and you can just take the advantage in that particular aspect of the value chain of fashion. So this was where we began to look at the business of fashion. That's the series of the business of fashion. So, and we looked at where the money is. You know, oftentimes what happens is people, the main reason, or the most obvious reasons why we get into business is so much in terms of for us to get value, in terms of for us to make money, and for us to now deploy the money to other things that we need personally. So, and it's important for us to, we looked at this topic in the light of where actually is the money in the business of fashion. And you will find it interesting that one major thing that people don't note is that the money is actually hidden in the information that you have in your business. And whether you like it or not, information, especially in this world, information is money. And just as people say time is money, information is money. The kind of information you generate from your business helps you to know where the money really is. And you can focus a lot more effort into that area to maximize the value from it. It's obvious to know that a lot of people are watching other people to see, oh, if this person is getting into this business and is making money, everybody's running into that business as well. But if for you to maximize whatever you're doing and to stay relevant, you must pay attention to the kind of information that you're generating in your business, and that will help you a lot. That's just a summary of what we looked at there. And second series on the business of fashion, we looked at know your trade or know thy trade. You have to zero in on something that makes you unique. That then more importantly, that core area that people are actually asking of your service. It's when you set out as an entrepreneur, you set out in business, you have a passion. But the truth of the matter is that passion is not just enough if it is for business, because your business must generate money, which makes the business to be sustainable and to remain relevant. And there's most oftentimes you find out that what you are passionate about that sets you out in that business oftentimes is different from what the customer is actually asking of you. Not that what you set out to do cannot generate money, but you find out that oftentimes what the customer is asking for of you is different from what you are passionate about. And when you are able to look at this well enough, then you know that area that is actually bringing in resources into your business, then you can pay more attention to that while still developing that area of passion that you may have. And eventually that also become a very good business line and income generating line as well for you. So you could look at that webinar as well to learn more. And so here, I think this was the webinar that we began to look, zeroing on financial literacy. And we said that financial literacy is non-negotiable. You can't be ignorant financially and say you are in business. And please, you'll find out that even uneducated people are financially literate. I always like to use this. I hope it won't get me in trouble since this will go online. I always use this joke and say that ask an Igbo man, for example, ask him 100 plus 100. He may not be able to tell you the answer, but put naira in front of that 100 without using a calculator, without thinking. It just tells you the answer without thinking. It just regurgitates the answer back to you. And you'll find out that it is not just financial literacy doesn't necessarily mean that you have to be educated in the four walls of a school. It just simply means that you understand how money works, and you understand, well, bringing it to our own times now, into our own world, you now understand basic terminologies about the financial world or the financial system. But even those who are uneducated, you find it interesting that they still they understand what assets is, what assets are. They understand what liabilities are. They understand that they need to keep a portion of their money into savings. And that's why you find out that the old women in our environment, especially if you go to a place like Ogupa, the money they make every day into. So, and it simply means that they may not just understand the terms the way we use those terms, but they deploy those terms in practice when even as business people. And so we must understand that it is not about the four walls of school, because a lot of people are graduates, a lot of people have gone to school, but they still don't understand, they still don't have financial literacy, or they still don't understand how money or the financial system works. And we began to look at that from the third series of the business of fashion. Then from there, we now delved into some basic financial terms like assets, liabilities, income, expenditure, equity, just basic stuff. And in this particular training, we delved into some other related financial terms as well. So you could take your time to watch that webinar. It's on our YouTube channel as well, just to give you an understanding, so that when money comes into your hand, you are not oftentimes small businesses, when money comes into their hand, every money is called income, but it's not true. That's not true. And you'll find out at the end of the day, they just end up getting into one trouble or the other, because they can't even categorize what money has come into their hands appropriately. So then we looked at financial habits for business success. That's what we looked at last week. We will do a recap of this. So let me just so again, like I said, just subscribe to our YouTube channel. That's Zucchini. Once you search Zucchini Center, it will bring out the YouTube channel. Subscribe to it, then you can also have access free of charge to those webinar series or those trainings that we've had in time past. Even today's one will be uploaded the next 24, 28 hours as well, for you to go back to watch again. All right, so let's look at last month. Let's just sorry, just a moment. Screen. There's something popping up on the screen. Okay, so let's quickly do a quick review of what we did last week. Then from there, we'll just dive straight into today's topic. All right, so last month, we looked at understanding what financial habits are. We understood the fact that financial habits are behaviors that we must, things that are now part and parcel of us, that we do on regular basis. How financial habits impact business sustainability and success. We also looked at developing good habits for business, success. So what are the financial habits that we talked about? Separate your personal finance from business finance. It's important you have to separate the two. In actual fact, you need to treat your business as a separate entity from yourself, which also means that you have to pay yourself a salary or a salary or an allowance from your business, or else you just find out that like what most small businesses do is that they just lump everything together between their personal money and the business fund. Then number two is you have to set clear financial goals. You must have an objective. You must have an end in mind. It's very important because that is what drives, it's your vision that drives, it's your vision that ensures you are disciplined to do some of those things. Then number three is that you have to make a budget. You have to, your business also has to live on budget. And then you also have to keep management records. Now, this is actually, this number four is what we will now be delving into in today's topic, but zeroing in on financial records. Now, then make savings a priority. It's very important. Your business must have a savings. Your business must have a savings. It's very important. Then you have to track your spending accurately. You have to. You have to. Then regularly monitor the cash flow. Cash flow, like I said, is how money comes in and how money goes out into money comes into your business and how money goes out of your business. It's important that you have to monitor that very, very well. And one of the tools that for you to be able to do some of these things is what we'll be talking about today. Number 8 is you have to use debt strategically. I didn't talk so much into this, but hopefully next year we should be able to look at the issue of debt instruments in financing business. Let's hope that we'll be able to have time to look at that next year. All right, then improve your financial literacy. You have to constantly improve yourself, improve your knowledge about money, improve yourself because as your business grows, now take for example, now as a business, we've gotten to a stage whereby now people are giving us LPOs to deliver projects for them. So it's important to begin to understand how LPOs work, for example. So, and that's what will happen as you grow. There are new things, financial terms that will be coming to you, financial transactions that will be coming your way, business transactions. So you need to have an understanding of how to execute it, the very best way to execute it, such that you're able to derive value as well from it. So you have to read books, attend seminars, watch webinars, qualitative one as that. And if you can also look for mentors that you know that are doing this stuff and they can show you the way, it's also important to have that. So now we're getting straight now into today's topic, essential financial records for business sustenance. So this training is designed to expose fashion designers to, number one, understand the benefits of keeping good financial records. Then number two is to know the essential records to keep. Then number three is to develop good record systems for business success. Again, number one, what we're looking at in today's training is, number one, understand the benefit of keeping good financial records. Number two is to know the essential records to keep. And number three is to develop good record systems for business success. I know, excuse me, I know that a lot of small business owners or fashion designers or whatever name or nomenclature we want to use, most people don't do this. Most people don't do this. Or if at all they do, what they really do is just to keep records of their sales. It's not just enough to keep record of your sales. It's important to keep record of everything, every financial activity that happens in your business. And you will also see why that is important. So your success in business will rest on good record keeping practices. And it's very important to notice. I think maybe I should have highlighted this while preparing this note, is that your success in business will rest on good record keeping practices and solid cash flow. Those two things, because in actual fact, one helps you to study the other well. Your record keeping practices helps you to analyze and study your cash flow. So it's how do I put it? It's just sacrosanct for you to understand that if you're setting out on business, you must ensure that you keep good record keeping practices. You must, because your business rests on this, but also rests on cash flow. Cash flow is more like the way blood is to a human being is the way cash flow is to a business. So without good records, it is simply impossible to determine the financial condition or profitability of your business. You know, it's always interesting when you see small businesses and they're telling you that, especially if you set out, you've acquired equipment, and you're saying in the first year of your business you are making profit. It's always interesting. It's always interesting, and you'll find out that there are a lot of things, a lot of even expenses that such small business has not captured. And they are basing everything on just the income that is coming in, and they are assuming that they are making profits just by the way of the income or sales that they see. The only way you can know if you're making a profit is when you actually keep records of your transactions. So as a small business owner, you should be familiar with and recognize the importance of proper record keeping requirements and cash flow planning. It is important that you have to be familiar with and recognize the importance of proper record. Now, I know not the word, it says proper record keeping requirements and cash flow planning. All right, when setting a company, regardless of the size, there are requirements under the Corporate Act. That is under in Nigeria, there's what is called the Corporate Allied Matters Act, CAMA. I think it was revised in 2020. So you need to understand what are the requirements, especially if you have a registered business or a registered, when we use the word company, it's always noted to mean limited or PLCs. But when you use business, it's always mean to mean enterprises, ventures, and in terms of registration. So there are requirements under law of the kind of books that you need to even keep under law. So, but unfortunately, most small businesses don't even know. So there are basic requirements under law. If your business is registered, the kind of books you are supposed or records you are supposed to keep. So even the law provides for the kind of records you are supposed to keep. It is important that you are aware of the legal requirements and ensure that you are able to produce the required information, because sometimes, take for example, if you have a registered business, at the end of each year, you are supposed to do a filing of returns to the Corporate Affairs Commission, for example. So, and there's no way you will do that effectively if you do not keep the appropriate records that you are supposed to keep. That's not the point of discussion today, because what we're discussing will also help you to know the records to keep to be able to meet those obligations. So, all right, so why keep financial records? This will deal more with the benefits of keeping financial records. Number one, accurate financial record keeping will be crucial to your business for the following reasons. Number one, to provide financial data or financial information that help efficiently, thus increasing your profitability. So what appropriate records, accurate financial record keeping helps you to do is that it provides you with financial information about your business, which helps you to operate that business a lot more efficiently and a lot more effectively, which helps you to increase your profitability. Now, the reason why I'm moving fast a bit is because we'll still talk about some of those things as we progress. So number two is to identify all your business assets, all your business liabilities, all your business income, and all your business expenses. So that's what record keeping also helps you to do. It helps you to identify the assets in this business or in your business. It helps you to understand liabilities. All the definitions of this, I think you will see in two webinars that we've done, where we define some of those terms. Then income, it helps you to see the money that comes into your business, which are actually income, and it helps you to see the money that goes out of your business, which are actually expenses. So this information can then be used to compare with your sector's averages and highlight your strengths and weaknesses. So what that means is that again, most small businesses don't release their their financial information out there. But you see that with more with the big corporations, the PLCs, the limited, where they publish their financials every year. So it helps to one company to be able to see that are in the same sector. It helps one company to be able to see what the other company is doing and to be able to measure their own performance vis-a-vis the performance of other businesses or other companies in the same sector that they are in. So it helps you to know where your strengths are. It helps you to see where your weaknesses are as well. And it helps you to re-strategize, to take advantage, to leverage on your strengths, and to find means to overcome your weaknesses. Then number 3 is that good records are essential for the preparation of your end of year returns and financial statements. Now, ask any small business if they have a profit and loss statement of account at the end of the year. Most don't have. And it's rather unfortunate that they don't have. But it is important, no matter how your business is, no matter how small it is, if it is a business, you must have financial statements at the end of the year, at the end of each operational year. You must have. And it's to make it easy, your year can always be January 1 to December 31st. It's just that it must be 12 calendar months. And most small businesses don't have. And still yet they'll tell you that they are making profits. You must have financial statements. If you're a business, even if you're an NGO, you must have financial statements at the end of each year. You must have it, because that in itself is a financial record for your business. So you must have a profit and loss statement at the end of the year. You must have the balance sheet, which tells you your assets, your liabilities, and as well as the equity in the business at the end of each year. It is important. You must have at least these 2 statements, financial statements, at the end of each year, because that helps you to see what you've done in the year. It also helps you to make projections for the year, how the years ahead. So it is not, there's no excuse. Yes, there's no excuse that you have as a business and you cannot produce financial statements for your business as at when due. You must have it. You must, and I'm not saying something that you cooked up that cannot be linked to some records. That's not what I'm saying. I'm saying that proper financial statement. We know the stuff that people do when it comes to applying for loans and applying for grants and everything. But we're talking about this in the light of building sustainable business. It is useful for you. It is useful for you to be able to advance your business, to be able to make your business rock solid. We know what people do is that it's when they are looking for loans, when they are looking for grants, they quickly look for an expert to scribble some information sort of for them. No, we're saying that you have to have this in place for yourself and for your business sustainability. It says these statements are critical for maintaining good relations with your bank. Well, that's part of it, but not just only with your bank. It's also good if when eventually people will come in to want to invest into your business and so on. But like I said, beyond that, these statements are very, very important for you to be able. So this is very, very important for you to be able to make very sound decision about the business that you run. So we will be looking at specific records now. The specific records your business will need depends on the number of factors. Number 1, such as the type of enterprise, the company goals, and your management needs. So these are some of the factors that determines the kind of records that you need to put in place as a business. Then most likely you might need an expert advice of an accountant to be able to help you with this. But so I just need to note that. So we're getting straight into to look at some of the simple records that you need to put in place. Now, however, before we get into that, whether there are some critical criteria that you must know for keeping records, especially financial records, whether it is on paper, whether it is on a computer, whether you're using an app, whether you're using a software, or whether you're doing it manually. Number one is that it must be simple to use. Whatever you are putting in place must be simple to use. It must be simple for whoever has that responsibility, especially even for you, because you're still the one that has to, you are the one-man show of your business. So you have to put in a system that is simple for you to execute, but again, also simple that any other person can come in and fit in as easily and quickly as possible. Then number two is that it must be easy to understand. It must be easy to understand. You know which one is it is serialized. It is the description or narration of that transaction is well stated. The amount is clearly stated. So it must be easy to understand. Then number three, it must be reliable. It must be reliable. That means you are constantly putting in that information as at when due. It is not you leave it off, you do it in January, you now remember in March, that's when you now come back to it. So there's a gap between January and between February and March, and there's no record in February. It must be reliable. It must be accurate. In actual fact, if what you transfer, let me say this, if what you transferred from, for example, from your account is 99,999 naira 99 kobo, don't approximate it. Exactly that amount is what should go into your records. Don't approximate it. Don't approximate it. Because if you look at corporate financial, when people talk about big organizations financials, yes, when they talk in terms of terms, they can approximate it. But when you actually look at their records, you will see that it is up to the last kobo. That you will see it on their records. You don't see approximation. So you don't approximate. You have to record exactly that amount that you have transacted. Very important. Then you also have to be consistent. If the format you are using is serial number, name of vendor, description, then amount, you have to be consistent with that methodology. Not that the next time you now change it amount first. No, you have to be consistent even with the methodology that you are using. So then another criteria is that it is designed to provide information on a timely basis. Now, this is crucial. That the record you are keeping, you must be able, if right now you want to sit on that record, you must be able to make meaningful decision out of it immediately. And that is why you have to keep your records up to your date. Maybe maximum 24 hours after you've done a transaction, that record has to be kept. It has to be filed appropriately. Not that you are piling them up somewhere till maybe the end of the month. No, maximum 24, maximum maybe 48 hours if it is over the weekend. You should file appropriately and document that information in the appropriate record that you have provided for it. So now let's look at the record itself. Number one is check journals. Now, because we're looking at this in terms of a particular context, but I will also explain the realities of some of these things for us. Now, check journals. I'm sure that a lot of us don't do checks again because of internet banking and mobile banking and all of this. But before now, what always happens is that when you open an account, you are issued a check, which from the check, you issue the check to people. So which means that you have to keep a check journal. However, the fact that you don't use checks again doesn't still mean that you can't keep a journal that takes care of the transactions that goes on in your bank account. The bank statement is one record on its own, but again, you'll find out that sometimes, especially the way our banks does our narrations, most times they don't even put the narration in the statement of accounts. the narrations are taken out of the with all the numerous numbers the banks are now generating. They just put the numbers. So it may be difficult for you to know what that amount was used for. So that's why it's good to keep a journal on the side where you now record that transaction, whether it is coming in into your bank account or it is going out of your bank account, where you now document that particular transaction to be able to understand what that money is actually meant for. So it's important to keep that journal. So maybe instead of saying check journals, you can just rephrase that and say bank journals. Sorry, bank account journals. Yes, I think your bank account journals. So in that record book, you can easily just on the back page of that book, you can have it. If you operate with Zenith Bank, for example, just say Zenith Bank on the back of the record book, Zenith Bank. Then you can now itemize it, dates, if there is a reference number, description or narration, then the amount, as well. So that helps you to track the money as it comes into your bank account. Because like I said, if you have to wait till the end of the month or end of the year, you will lose track of what, or maybe an accountant is coming in to help you to sort out your books. You will lose track of what the payment is made for, or is made for, because the narration may not, even when you've put in the appropriate narrations while you were doing the posting, sometimes the way the bank's system is configured just removes your narration and put their own codes and everything in there. So it's important for you to do that. Then number 2 is cash receipt book. Now, cash receipt book basically is a list of all cash received, an explanation of where the funds have come from, for example, debtors, loan, etc. Again, this is required for each bank account. Now, what this is saying is that now the cash receipt book now comprises both money you received as cash and money that is paid into your bank account. As well. So the difference between this cash receipt book and the check journal or the bank account journal, as the case may be, is that the cash receipt book documents the money that you collect as cash on hand, as well as the cash that is paid into your bank account. So it takes care of all those cash receipts, and you have to document that as well, because sometimes the cash receipt that you get could be a loan. That means a loan that you got. So you have to note it there. But in this particular case, you also have to note the name of maybe the payee, for example. You have to note the name of the payee, where the money has come, so that if it is a loan from the bank, you note the bank, and the narration shows it, and the amount. Because this particular one helps you to separate whatever money is an income, whatever money is a liability. Because, for example, a loan is a liability. But if the cash that you got is from a sales of a particular goods or service that you are rendering, then that is an income. So within the cash receipt book, you'll find out that it can be categorized into put into different categories, whether loan or income, as the case may be. Now, number 3 is sales invoices. Now, it's sales invoices. As a business, you must have a sales invoice. I know that a lot of small businesses are using apps, and most oftentimes that's really what they use on the apps is the invoicing system on the app. So you must have a sales invoice. You must have it. And if you are using an app, fantastic. But if you are not using an app, if it is a physical stuff that you are using, then that means you must have your sales invoice. That means more of a booklet. It's in a booklet format that has serial numbers, and you fill out. Most oftentimes, it also comes in duplicates or triplicates, depending on how big the organization is, where the original copy is given to the customer, and you have the remaining copies as backup. But please also make sure that the details and your sales invoice must have the name of the customer, the address of the customer, maybe the phone number of the customer, then the details of whatever the customer has bought or the service rendered, then the amount and what have you. So then we also have the purchase invoice. Now the purchase invoice, now the sales invoice helps you to keep track of your sales. That is money that comes into your business. The purchase invoice helps you to take care of the things that you are spending, the expenses that you make in the business. So you must also have an invoice that helps you to, not necessarily an invoice, a document that helps you to keep track of it, because you will find out that the people, most times, small businesses, the people you deal with, some of them don't even have invoice when you buy from them. So then you must have a record book where you keep those records of the purchases that you make. But however, if you patronize someone who has an invoice, you can always collect the invoice from them. Now, let me quickly say this. If, for example, you visit stores like ShopRite and the rest, and you're making a purchase on behalf of your business, make sure that that printed slip that they print for you, that printed slip, you have to file them appropriately in a file or whatever file jacket that you are putting in place in your business for that purpose. So that's another record that you need to put in place. Purchase invoices as well. Then the sales day book. Now the sales day book, what the sales day book does is that it takes care of, that's where you record. Now let's go back, that's sales invoice. So the moment you have your sales invoice, it's recorded, there must be an entry book you record that sales to. Now the difference between the sales book and the sales invoice is that the sales invoice is like a booklet, but the sales day book is a book that is well outlined. I think you can get it in any of the stores, bookshop or any of the stores in Ibadan, particularly if you're in Ibadan, you can get it in the Dugbe area. But so what now happens is that your sales invoice, that means for you to see your transactions, you have to be flipping from one page to the other. But for the sales day book, you are able to see all your transactions just on one page of the book. That's the benefit of the sales book as against the sales invoice. So whatever is in your sales invoice, it should be translated to a sales book, which helps you to see. It's only when you now need nitty-gritty information that you can now refer based on the reference number on the invoice which you have inputted on your sales book. You can now refer to that invoice to get more other information that you might need, particularly as relating to that customer or to that particular transaction. But on that sales book, you are able to see, for example, all the sales that you have done in in a week, in a month. Sometimes you are able to see it from the sales book. So the sales day book should split the sales between the VAT elements and different types of product that you sell. So it's also saying that your sales book should be able to separate what is the actual from the actual payment of that good and service. You are separating the VAT element out of it so that you're able to see how much you are remitting to the government at the end of the month and the amount that is meant for the good and the service that you have rendered or that you have exchanged. So, and the different types of product that you sell, this analysis can be simple or more complex, and that is the truth. Depending on the information you require about your different products or services, if you have diverse products, you'll find out that the information that you will see will be a lot more elaborate. But if your products are just as simple as just clothing sales or production services, you'll just find out that what you have will be simple. But whichever way, it's good for you to have a sales book or a sales day book as it is written there. Then you also have what is called a purchase book or the purchase day book. So it's the same thing like the sales book, but the difference is that this helps you to document every purchase that you have made into a book. So rather than having to look for the purchase invoice one by one, you're able to see everything in one instance on the page of a particular book of all the purchases that you have done in a whole week or a whole month, depending on how big that book that you are using is. And at the end of the year, you're able to also see the total amount of whatever purchases that you have made as well. So then this again need to be analyzed into cost of sales expenses and administration expenses. Now, so when an accountant comes in, that accountant can help you to separate your purchases into different headings, expense headings in your P&L account. So another record that you should keep, which you have to keep, is the debtors record. These books will show you at any time what you are owed from your customers. Now, this is another record. You know, small businesses fail to collect their money back from customers, especially when the customer has gone with their goods and they've not paid. But it's good for you to keep a debtors record. Even if you do not get the balance of your money, you are able to identify customers that are always running away with your money, so that you can provide appropriate strategies, not chasing them away, but provide appropriate strategies to help you to recover your money from them. But you also need to keep a creditors record. And another thing you will also find with this creditors and debtors record is that it also helps you to see how much money people are owing you over a period of time, so that you don't take those things for granted. And in the reality of it, those might actually be where your profits are actually locking in. But your business can't declare a profit because you've not collected the monies that you were supposed to collect. The same thing also goes with the creditors record. Creditors record simply are that is the place where you keep the records of the people you are owing, especially your suppliers. Because it also helps you to know that I'm owing these suppliers. So this money is even as much as this. Let me quickly find a way to pay back the supplier, so that you can keep the relationship with your supplier. And don't forget, your supplier are very, very crucial in you ensuring that you deliver good services to your customers. So another one, which I feel is very important, is the payroll record. Even if you are the only person in your business, prepare a payroll. What is a payroll? A payroll is just simply a record that shows the salaries that you are paying out. So records must also be kept regarding the salaries you are paying to your staff. Information must also be maintained on how the tax is calculated and any additional refunds of expenses. Separate expenses claim forms must also be retained for this payment. So now, I won't dwell so much into that for now, because it's really for at least a little bigger business that needs to maybe some of your staff have done something, use their own money to execute something, and they need to reclaim those funds back. But you can also use it for yourself too. If you've expended your personal money for the business and you want to reclaim it back, you could just have a record where you store that. So now basically, but payroll, you must have a payroll record as well. That is where you keep records of the salaries that you are paying, whether to yourself or to other people. Now, again, let me just quickly run through again so that now we are dealing with small businesses here. So, and we feel that these are the key ones that you should have. That's number one, the checks journal balance, of which you can rephrase and say your bank account journal, where you keep records of the transactions as it goes on in your bank account, in your business bank account. Then the cash receipt. This documents the funds as they come into your business. So again, but you will also find out that what you can do here is that between the cash receipts book and the sales day book, is that the sales data book records your sales. That means money that comes in through the services that you render, while the cash receipt book are money that come into your business, but they do not come in from the services that you render. So you can use that to separate these two books. That means other monies that come into your business, but which do not come in from the services, the goods or the services that you render, is taken care of in your cash receipt book, while the sales book takes care of the monies that come in or the sales that you make from your goods and your services. So we've looked at sales invoices as well, purchase invoice. So sales invoice are your own invoice, which you issue to your customers based on the goods and services that they are purchasing from you. Purchase invoice is what you get from your vendors or your suppliers based on what you are buying from them. So then the sales book is where you put in those records from your sales invoice, and your purchase book is the record you keep from your purchase invoice, Now, let me just quickly touch on something again. One of the things that you'll find out with sales invoice is that some businesses may decide to have sales invoice and receipts. But to make it easy, what most people, small businesses do is that their sales invoice are also their receipts. What does that mean? What that means is that in your sales invoice, you would have a column that shows the total amount of what the person is purchasing, but also has a column that shows the payment the person has made. And if there is still an outstanding, it also shows it. So so sales invoices are designed like that to capture both your sales as well as the payment that has made, as well as the outstanding. While in some cases, what some people will do is that they have their sales invoice separately and they have their receipts separately, which means that when they issue the sales invoice and payment is made, they now issue a receipt. And I always like to clarify this, that sometimes you must be able to differentiate between sales and the actual income, because sales is actually the total of what you've sold, but the income that has come from the income that has come from it is now the sales actually is income, but in terms of what you've received is what the customer has paid to you. Then you now have the outstanding, which falls under the debtors record, and you should be able to follow up on that to get that back in. Also talked about this. So now, having said that, let's quickly look at, because there are two ways by which you can set up your system, and that will be the manual process, which means that you have to do a lot of writing, or you're keeping maybe on your computer, maybe using Excel sheets. Those are manual processes. Then you also have the integrated solution, or the computerized system, where you use apps, softwares, and what have you. But like I said earlier, what happens most times is that when people use apps, the only thing they are using on their apps are the invoicing system, the invoicing modules. That's what most people use on the apps. And again, you can also use both. For example, at Zucchini Fashion Center, we use both. We actually use, we still have records that we keep in paper format. We have records that we keep using Excel sheets. We have the ones that we've translated into a particular app, or software that we use, which helps us to generate our P&L and our balance sheet, as the case may be. So whether computer or manual, the difference between keeping manual records and using accounting software is information management. That's the difference between the two. One helps you to process information quickly, while the other one is very, very slow and very, very tedious, which means that you have to still do the manual process of putting the information together. It's not bad. If you are starting as a small business, you could still be at that level, but because again, the challenge with using some of these softwares is that you must have an understanding of accounting. or you have an accountant that helps you to input the information correctly for the system to be able to process it and come up with the reports that you need. So is information management. That's just the basic difference. One helps you to generate information quickly. The other, it's a bit tedious. But whichever way, you must make sure that you still have your record in place. It is very important. Don't use this as an excuse. You must still put that record in those records in place. So data should be entered into the accounts package only once. It should then emerge in the form of profit and loss account, balance sheets, and VAT returns. So if you're using whether the manual or the computerized systems, you must be able, at the end of each month, you must have a loss and profit account. You must have a balance sheet and a VAT returns. And there are several other reports that you can generate, but we will just limit it to profit and loss and balance sheets at this level. So let's look at what are the advantages of manual accounting. Is that you don't need machines. You don't need maybe computers. You can just have your record books. And if you are tidy enough, you will find out that you can keep some of this record maybe in one, two books. Maybe one book, which is your receipt books, and the other book, which is more of your purchase and your expense books. But if the narration is well done, once an accountant comes in, the accountant is able to separate everything into appropriate categories and prepare P&L or profit and loss account and prepare balance sheets as well for you. However, the disadvantage of a manual system is reduced speed. It is slow, increased effort of accountants. That means you will need professionals a lot to help you to sort out the records that you have put in place. Then it is relatively slower internal control reporting and repetitive nature of work, which means that you have to go back. But for me, this also is applicable even with computerized systems as well, because you still have to go on that software to input those information into it. Then the main advantages of computerized accounting is that it includes high speed and flexibility of reporting, because the computer itself, the system itself is designed to help you process those information as it is inputted. But however, this is what you need to understand if you are using a computerized system, is that the person inputting must have an understanding of that system, because the person at least must have an understanding of accounting. Because if the person inputs wrong information, the report you'll be getting will be very wrong, even though it might look like as if it is a fantastic report. It will be very, very wrong. Then it is also reliable. It is no routine work, increased accuracy, internal control system of increased productivity, and easy backup and restoration of records. Now, for example, the app that we use, anywhere in the world, we can easily get into that app and retrieve our records once the inputs are done as at when due. So that's one of the advantages, or those are the advantages. However, the disadvantages of computerized system is relatively high costs of introducing and using the system. Now, like I said, there are apps available, quite a number of apps. I don't want to mention. Okay, maybe I can mention. You have Books, for example. You have QuickBooks, which are a lot more elaborate when it comes to keeping appropriate records for your business. Then, but it also needs special training. Like I said, the person that will handle those softwares must have an accounting, must be good in accounting. Then increase personnel cost and a dependence on machines, because it gets to a stage that if your business deploys a particular software, you might also need to deploy maybe a server for your business, depending on the kind of software. And sometimes some of these softwares are crazily expensive, because you'll find out that the apps that we still use for free is limited in terms of scope of what they can do for us. But if you have an understanding of accounting, you may be able to still manipulate those apps a bit to get what you want done, especially at the small level of your business. So, all right, in conclusion, keeping accurate and up-to-date record is vital to the success of your business. Listen, record keeping is important because I think someone said this. I can't remember the person, but it's and I repeated it at a meeting that I had maybe sometimes last week, that anything that is not documented was never done. Because the truth is that even if you did it, the only way that you can ascertain that it was done is if it was appropriately documented. So, and that is why the documentation is very, very important, because documentation also helps us to forecast. So keeping accurate and up-to-date record is vital to the success of your business. Good records. Sorry, just a moment. Okay. So good records help you to minimize, number one, losses. It helps you to manage your cash. It helps you to meet the legal, regulatory, and taxation authority requirements. Now, take, for example, if you do not document well, authorities can bring outrageous taxes to you, and you don't have any evidence to prove otherwise to them. Especially if you are the kind of person that use your account to just accept any kind of money, just in the name of building your account. When taxes come in, they will just put your taxes based on the money that has come into your account, with the assumption that all the money in your account are income for services that you have provided or goods that you have sold. So, but if you have appropriate invoicing system, for example, it helps you to show that, oh, these are the sales that we've made in the business, which should be taxed, not just any money that comes into your business or into your account, which most oftentimes that is what regulatory authorities just take advantage of to tax you. So if you don't have appropriate appropriate records in place, you will end up paying taxes that you are not supposed to pay. Then also helps to improve your financial analytics, which means that you have sufficient data, which helps you to make very, very informed decisions about your business. Now, one thing that is interesting to note is that all those documents that we mentioned earlier, the purchase invoice, the sales invoice, the sales book, all those things can be summarized under 3: cash movements. Now, basically, the cash movement is the bank or the check journal or the bank journal, for example. Then you have the sales. So everything that deals with sales, that means your sales invoice, your sales book comes under sales. Then purchases, everything, your purchase invoice, your purchase book come under your purchases. So you will see, very interesting to note here is that your cash movement records help you to see how money moves from into your business and how money moves out of your business. Your sales book helps you to see how much money you are generating. It also helps you to see those who are owing you in your business. Then your purchase records helps you to see the things that you are buying or the things you are expending money on, and the people you are also owing. So that is the summary of the financial record. So if you want to just make it simple for you, just look at it from this angle: cash movements, sales records, and that's cash movement records, sales records, and purchase records. And you can just streamline whatever record keeping into these 3 categories to make it easy for you to use, especially as a small business. So then again, your record keeping system, whether manual or computerized, should be what? I'm just reminding us again, number, it has to be simple. Make it as simple as possible so that it is easy for you to do and quick, and you can always do it quickly, even in addition to the other job functions that you have as a small business. Then it must be easy to understand. Don't try to code anything, because in coding, you might also run yourself foul because you will forget whatever you've coded. Make it as simple. Oh, the name, Sunday, Amos, narration, purchased, sales of shirts, amount 30,000, If he has paid 15,000, then balance 5,000. Simple, just make it simple, then make it reliable. That means you are constantly updating that record. Don't omit days. Don't omit months. That is even worse. Omitting months, and you're now coming back again the third month to now start again. No, then be accurate. Then also be consistent. Like I said, be accurate in terms of the information. If it is sales of goods, yes, put it there. If it is a loan, write it there. Loan, the name of the person that has given you the loan, write it there. Then the amount, write down the amount to the kobo. If it was a transfer that was done to a particular kobo, don't approximate. Don't approximate to the kobo. If it is 19 kobo, write 19 kobo there. Don't approximate. Then be consistent. Make sure that the formatting you are using is consistent. Don't be changing format every now and then. The way you write it yesterday is different from, is a different format from today. No, be consistent with it. That's why you could easily just get ledgers to help you to streamline this well enough. Then it is also designed to provide information on a timely basis. So which means that as at when due, you need to get information. Oh, how many people are owing us this week? You see it quickly, and you're able to take action on them. If you have to call them, if you have to send text messages to them, whatever you have to do to get your money back, it is easy for you to do. Anytime you just pick your records to check. So thank you very, 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 very much. I don't know. Let me stop here. So if you have any question, if anybody has any question, if you have any question, any question, anybody has a question? Hello, can you still, okay, I'm sure that you can hear me. Anybody has a question? Okay, I don't think anybody has a question. So, but again, sorry, I'm sharing back. So again, like I said, it is important. Let me just flip back. It is important to keeping records is vital to the success of your business. Good records helps you to minimize, number one, losses. It helps you to manage cash. Then it also helps you to meet the legal, regulatory, and tax authority requirement. But it also helps you with financial information about your business. But like I said again, all those records that we've discussed can be summarized into these three: cash movement, sales record, cash movement records, sales records, and purchases records. Then make sure that you make your record system simple to use. When you can use manual, it can be a mix of the two, but make sure that it is simple to use, it is easy to understand, it is reliable, it is accurate, it is consistent, and it is designed to provide information on a timely basis. So I'll just quickly go to some key announcements. Just to remind us again that we have this partnership with the University of Ibadan. It's on that platform that we're bringing you this webinar again this afternoon. So you can visit the website to get more information and to see what you can benefit from the partnership with the University of Ibadan. We're also informing you that with our applications for the Zucchini Fashion Apprenticeship program is still ongoing. It's actually extended. It's supposed to close last month, but we've extended it till the end of the month. And this program is fully funded for anyone who is able to meet up with the conditions of the scholarship. However, if you want to pay to take advantage of the program, you can also do so. So if you visit the link under the apply online, you can always go online to get a lot more information about the programs. There are two program options: the Zucchini Fashion and Design Apprenticeship Program and the Zucchini Fashion Retail Apprenticeship Program. So just take advantage. Then we also have our regular training programs. The admission is already commencing for next year, the beginning of the early part of the year. So if you visit our website as well, you'll get the information on how you can apply for the training programs. We have several programs on fashion design, on garment production, on entrepreneurship as well. So you can go online to get the information on the registration or the application for this program as well. Then our capacity development series are more like short courses. It's designed to take place on monthly basis. 1 week, some courses are 1 week, some courses are 4 weeks, but there's no course that is more than 4 weeks. So it's just to upgrade your skills, own your skills, and just learn new things that will help you to do a lot better in the industry. We have the college fashion design program, which is targeted towards students in secondary school to hone their skills while they're still in school, so that when they graduate, at least they have a skill in addition to the academic exploits as well. Interestingly, the NAPTEP exams for December is taking place tomorrow and next tomorrow, but you can still register for another exam that will be coming up later next year. That's the early part of next year, I think around March. They have 2 exams every year, March and December. So you can register for the one for March. The details are on the link in that in this the picture shown on your screen. It's just for you to have a government authentication of the skill that you have. Then this is part of the partnership we have with UI. There's a workspace in UI that you can take advantage of if you're a fashion designer, especially this season, which is the festive season, and a lot of production work is going on. You can take advantage of the University of Ibadan Garment Lab and do your work. Where just pay a token and you have access to modern equipment to do your production work. Our consultancy services are also available to you. We have 4 distinct areas: business development and support, process and systems development, funding and business management, then research and feasibility studies. So anyone of those core service areas that you want us to help you with, just for a token fee, we will gladly help you out with those services. And so this just breaks down those grouped service into explicit service. So accounts and audit, if you need accounts and auditing of your, that means putting your records in proper place to prepare financial statements, we can help you out with that. Or to audit your account, we can help you out with that. Website design and maintenance, you want to put in place a website for your business, we can help you out with that. You want to register your business, you want to put a proposal in place or business plan in place for your business. You know, business plan is not just only for loans or for grants. Business plan is also, it's like you want to build a house and you have the plan of the house. You want to build a business. It's also good to have a plan for your business, which guides what you do in that business. So we can also help you with that. Then personalized advisory service, because we are also in the business, we have some experiences. You can glean from those experiences as well, so that you don't fall into the same mistakes others are falling into. You can also develop business models for you. Funding and loan applications, we can also do that for you as well. And if you need your social media pages to be administered, we can help you as well with that. There are other offerings that is available. If you visit our website, you will be able to get a lot more information on the other services under our consultancy service that is available for you. But one thing we can assure you is that our services are bespoke and they are also data-based. They are data-based. All right. So again, I just reminding us of the partnership that we have with the University of Ibadan, and how this partnership is also impacting the fashion industry or the fashion landscape. So please visit our website. You'll get a lot of information that will also help you, that will help your business. Some of the things that we've accomplished, how we accomplished them, is also available to you on our website. So please, and you can also, again, subscribe to our YouTube channel. And this video of today's webinar will be on the YouTube channel in the next 24, maximum 48 hours. So once again, I want to say thank you to everyone who's joined this training today. I don't know, okay, I have a chat. Let me just quickly check the chat. If, okay, no question. The person is saying no question. Thank you very much. But I want to believe that this training has been useful for you. That you can also go back, but you can also contact us if you still have a lot more details that you would require. You can also pay visits to our office at Ringwood. We will show you the kind of records that we keep as well, and which will be useful for you in your business. But what is important is that having an understanding of these records, of this document, it's important for you to, you can now, let me say, domesticate or adapt, or yes, adapt to where you are. What is important is that you keep the documents, you keep the records. That's what is important. You can use any format, you can use any compressed format to make it easy for you to do at whatever levels, and you can continue to expand as your business grows. But don't use the excuse of the tediousness of it not to keep it. You're shooting yourself in the foot, and I can bet you it will haunt you in your business in the nearest future. So once again, thank you so much for joining the training or the webinar this afternoon. Have a lovely, lovely day, and the best of the season to come. So till next year we'll be looking at January, we'll be looking at pricing. We'll be looking at, that's what we'll be kicking off with next year. In January, we'll be looking at pricing, getting your pricing right. That's what we'll be looking at in January. How do you price? What are the factors that you look at to price, to come up with your pricing system? That's what we'll look at in January. So once again, thank you so much, and have a lovely, lovely day.